FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's February 4th, 2019. Well, new rules. We're going into what I call the new economy. We've been in the new economy for the past 12 years since the crash, and the rules are changing. You need to know what they are. And if you want some help with figuring out what those rules are, send us an email. If it's a great one, we'll read it on the show. If it's really great, we'll even have you on the show. As always, the email address is kl@kerrylutz.com. So rules changing. There are rules that work. What the person you're about to hear from would call unconventional money rules. He's been on the show before. He's in the midst of releasing another book. His name is Joel Salomon. Joel, it's great to have you back on the show. How do you describe unconventional money rule?
So, Kerry, unconventional money rules are rules that the general populace has not been educated on. And I start my upcoming book with items that generally are more based on feelings and processes that are quite unusual. I start with belief systems. I start with, what is your belief that you can make money in different investments? Because if you have absolute doubt that you can make money in stocks, then you're probably going to make bad decisions. So I ask my clients, and I ask everyone I meet, what's your level of belief? And where 1 is massive doubt, there's no way I can make money in this investment, and 10 is absolute faith, I know I'm going to make money in this investment, what their level of belief is in the investment. Now, it doesn't mean you don't do any analysis. And in fact, what is likely is that the more analysis you do, the higher your belief level. So the two will go hand in hand, but it's possible that you've done a fair amount of due diligence and analysis and you still have massive doubt, and that's going to impair your ability to make money. So that is one of the many rules I have in my upcoming book on unconventional. So that's an unconventional rule, I would say, because most people don't talk about their conviction level or belief level in their investments. Another one that's going to be pretty out there, I think, is avoid diversification. Not diversification, but diversification. It was a term that was coined by Peter Lynch.
I remember.
In the 1980s. And he coined the term when he was describing businesses that would buy other businesses and dilute the company by investing in worse business than they already had. I use the term to describe investments where I know for me personally, as a former hedge fund manager, that I didn't have 100 great ideas, but investors wanted me to diversify, to not be invested in 20 different stocks and have 10% in one stock or 5% in another. They wanted large diversification so that if any one stock went down, they wouldn't have a big hit to their profit and loss on a particular day. So they wanted low volatility in their daily or weekly or monthly performance, despite the fact that I didn't have 100 great ideas. And I actually tracked this both at Citigroup and at Salomon, my former hedge fund. And in 2013, when I was managing my own fund, 120% of my performance came from 6 stocks. Now, we owned 60 longs and shorts. And so we actually made more than 100% from. So obviously what I'm saying is we lost 20% of a return from the other 54.
Yeah. So I remember diversification. That was a walk down Main Street or Wall Street, a walk down Wall Street, Peter Lynch. And he always said the dumb money wasn't dumb until it listened to the smart money. And,
Right.
right. I mean, he had a lot of other sage advice there. So what are you saying that you need to do then? Obviously, take a self-test of enthusiasm for the investment concept. If you're 100% sure it's going to return money and be profitable, you probably shouldn't do it then either, because you're probably not thinking rationally, because nothing is 100% sure moneymaker. But at what point do you say, I'm not feeling confident enough, I need to not do this? What's the kickoff percentage there?
That's a great question. I usually tell my clients, if you're on a scale of 1 to 10, if you're not at least a 7, if you're feeling wishy-washy, 5, 4, 3, 2, 1, don't invest. So you need to be fairly confident. And I agree with you. There is a level of potential overconfidence where you'll continue to throw bad money after good and not make rational decisions if you just have an overconfidence. So there's that risk as well. But in general, I would say a high level of belief in your investments will significantly help your returns rather than having significant doubt.
What if you're like a gullible person, though, here, Joel, and you just get taken in? Like, there was a company, I was at the Vancouver Resource Investment Conference, and it happens to be a company, it's a great company, but after I listened to the CEO do a presentation, I wanted to go out and buy that stock. And every guy put on a presentation, if they were really well-established, polished presenters, you'd want to buy their stock. So maybe too much confidence, maybe you need a gullibility index. I'm not sure.
Well, I think it goes back to my initial point. It's not just belief, but you have to do a little bit of your own due diligence. You have to check out the company, look at, a price to earnings ratio. And I have a 5-step, very simple process in my upcoming book, a proprietary stock process, 5-step, very simple process that you should do to just do a double check on that belief system. Mm-hmm. And I'll go through a couple of the steps just right now, but I'll tease the listeners to purchase the book, and I'll just tease the readers a little bit more. For anyone who reaches out to me in the next week, they'll get the book for 99 cents at salomon.com or joelsalomon.com. So the first couple of steps in the proprietary stock screen, and let me just spell Salomon first. It's SALAURMOR.com or joelsalomon.com. So the first 2 steps. The first step is when a company comes out with their earnings, you check if their earnings growth rate, so say companies are coming out with their fourth quarter 2018 earnings currently, you check to see if the fourth quarter 2018 earnings over the fourth quarter divided by the fourth quarter 2017 earnings is at least 10%. Mm-hmm. So that's the first step. The second step is to check that the revenues are growing as well. So you check revenues for the fourth quarter 2018 divided by the revenues for the fourth quarter of 2017. That should be at least 5%. And the third step I'll give as well is to check if the earnings growth rate that you calculated in the first step is greater than the revenue growth rate in the second step. So you actually have an operating margin that's improving. So those 3 steps, I'll give a couple more in the book, but those 3 steps are the first steps to my proprietary stock screen. And if companies are touting themselves really positively and yet their earnings aren't growing, their revenues aren't growing, their margins not expanding, it's probably not a great investment.
Okay. But so we're in a phase now where value investing has done horribly. I remember being at a presentation. A guy who was a master value investor for decades. He'd done double-digit returns, which on Wall Street, pretty darn good. Since he conceived this fund, I just remembered the name of it the other day and looked at it. So in 2005, he conceived this fund. It's returned a whopping 4% total return. Value. So what do we do with value here? Is value coming back? Does anybody care about value? What's the deal?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The golden age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Aton will reap the best rewards. Aton's discovery of the legendary Lost Mountain of Gold at Rodruin and its current aggressive drilling program there could potentially reap those rewards. Aton Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Aton possesses first-mover advantage in the underfollowed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Aton's latest drill results and news, go to atonresources.com. Aton trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
I think over long periods of time, value does work, but again, you have to look. Again, another rule, I don't like to make rules, so don't just use broad terms. I recommend in my book, look at each individual security on its own rights, and there may be some great value stocks and there may be some great growth stocks. So I'll look at each individual security on its own merits and determine if that individual value stock has merit and invest there. But to say, okay, all value stocks are going to go up or all value stocks are going to go down, I don't like to use rules.
And so why has the market, Joel, continued to go up over the past 10 years, even though top-line growth hasn't been that great? We had the tax cut, we've had buybacks, everything else. It's got something to do with other than whether or not it's reasonably or fairly valued, doesn't it?
I'm a fundamental analyst and investor, so that's what I base my investments on, and that's basically what I talk about in my book is fundamental analysis of stocks, fundamental analysis of other securities. And so for me, it's over long periods of time, the growth rate in the value of the company should correspond to the market value increase of the company. And so if it's not growing earnings over long periods of time, then you would expect that the stock price should not go up over long periods of time.
But, certain companies like IBM, for instance, and I'm not saying whether it's a good investment or not, but they haven't had top line growth in their business in a decade. And yet, the stock performed pretty well up until the recent correction. Yeah,
I don't like to comment on individual stocks. I will, again, look at the earnings growth potential going forward and see where the price to earnings ratio is compared to that earnings growth. And where the value is in that company should be related to that expected earnings per share growth going forward. What's happened in the past is in the past, but I prefer to look at what's the expectations going forward. And every analyst will have their own models and expectations for the company going forward, and then make their basis of investing based on those expectations.
I gotcha. So what do you put your money in now? You had a issue with cryptocurrencies. Most people are going to lose money in them. which is certainly the truth I knew back in December of 2017. Get out of cryptos, but nobody listened to me. And sure enough, they're down below that 3880 number that I expected them to hit, and probably going to go crack below 2000 is my guess. I mean, it's a 80%, 85% retracement here, Joel. That's pretty substantial. So are they a good buy? Should we be looking at cryptos?
Yeah, I think the comment I made relates to belief systems. And I'll give you the story about two guys who bought Bitcoin on November 27, 2017, not far from the top, but it was trading at 8,000 on that day. And one guy had gotten a tip from a buddy of his who had told him, dude, you got to get involved. It's up 8 times already this year. And Bitcoin that day was at 8,000. And again, back to my comment on beliefs, his belief level was very low, like a 1 or a 2. He was very scared. He said, oh, this seems risky. It seems speculative. I don't know. But he invested anyway. The second guy, he had done all his research. He read the white papers, and he had very high confidence that he was going to make money in Bitcoin. And so he was probably a 9 or a 10. Now, a few days later, Bitcoin's up at $10,000. The first guy says, oh, I hope it doesn't go back down. And the second guy says, see, I told you I was going to make money in Bitcoin. And now a few days later, Bitcoin's back down at 8,000. And the first guy, who was so worried and scared, sells. And he's so grateful he didn't lose any money on Bitcoin. Mm-hmm. The second guy, who's done his research, who knows that given supply-demand dynamics and given the time of year and given his view, he doubles down and he buys more. And 3 weeks later, Bitcoin's at 19,500. It's all-time high. And the second guy sells at that point. He's made almost 250% on his money in less than a month by doing his research and having a very high belief level. The first guy who was really scared about investing doesn't even know that where Bitcoin is, he's about to lose money in another investment. So my point being that belief systems have a really big impact on investments. And it could be that the same investment, as we just saw with Bitcoin, can make two people, one of the two people can make a lot of money and the other person can either make no money or lose money. And so I say right now, do your research. What's your belief system? And I was telling people, a lot of people, to me, it's really good indication when I get a lot of people ask me about an investment. And in November and December of 2017, everyone was coming out of the woodwork asking me, calls and emails. So what do you think about Bitcoin? What do you think about all these cryptocurrencies? I was getting cousins who I didn't talk to in many, many years calling me and saying, Joel, is it time to invest? And that was when Bitcoin was right around 20,000. It had been up 20 times in a year. And I don't know too many stocks that go up 20 times in a year, let alone 200 times in a couple of years. So if you look at those kinds of movements, you know that it's unlikely and unsustainable. So same thing. I mean, I don't know. I haven't looked at what perceived fair value is in these different cryptocurrencies, but there was a big supply-demand imbalance, and it might be going the other way at this point, where no one's calling me on it, right? It's everyone's thinks it's left for dead, and there are a lot of people, I'm sure, thinking it's going to 200.
I'd say 2,000 is probably a reasonable number, but it's got certain technical flaws in it that haven't yet been the public hasn't become aware of yet that make it particularly dangerous. And a lot of it depends on governments. And people say, but J.P. Morgan's in it and all that. Hey, J.P. Morgan, it's like that movie Trading Places, right? When they explain to Eddie Murphy, who they brought in off the streets, that they make money whether their client loses money or makes money, they get a commission no matter what. And that's the way it is with J.P. Morgan and the big money center banks, the big brokers, they're going to make money no matter what happens to you. So just because they're doing something doesn't mean that that's a sign it's going to go up. It could well be the opposite. And that's what has happened here. So what other...
Yeah, I completely agree with you. Most of the major money center banks are playing the broker-dealer, and they'll make money on either side of the trade, and they have. And it's the same things with options as well. Mm-hmm. They want you to trade options and futures because they play the broker and make money on both sides.
Yeah, they're agnostic. They don't care long or short, right? Doesn't matter to them. So a lot of interesting things we've covered here. Joel, when's the new book due out?
Oh, I'd say in the next 4 or 5 months. We're still in the testimonial stages, and so once those come through, then the whole process of production comes. So it's probably 4 to 5 months away.
All right. Excellent. So, Joel, in the meantime, we want to find out more about you. We want to connect with you on the web. Check out your site. Where do we go?
Yeah, it's either Salomor.com, that's SALEURMOR.com, or simply JoelSalomon.com, that's JoelSalomon.com.
Excellent. We'll have a link to it, as always, in the show notes of this interview. If you're listening on YouTube, if you're listening on the podcast channel, then please subscribe, like, and share. Okay? Like the drill sergeant from Full Metal Jacket, subscribe, like, share. All right? Just do that. It really helps the show a lot, helps us get the message out, helps us get the message to people who need it the most, because this is the new economy, and you can't afford to make the same mistakes that you made in the past. I know I can't. And therefore, there's a whole new bumper crop of mistakes that you could be making, but more importantly, don't let history repeat itself. Joel, been a pleasure having you on. Thanks so much.
Thank you, Kerry. Really appreciate it. Have a great evening.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.